provision. The government took a stand that
Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Patra and this is where we will discuss everything about the markets from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll get you expert views to find out where exactly are opportunities emerging for you as an equity investor as well. Of course, the big deal on the street is on the pharma company Cipla. We'll understand all the contours with regards to the news flow that Blackstone is expected to submit a non-binding bid to acquire stake in Cipla as well. But first up, a quick check on how the markets are doing at this point in time. The Sensex is up by 485 odd points at 65,722. So after 2 days of declines, the markets are looking up in the green right now. The Nifty also hovering at 19,522, up about 140 odd levels, so a 0.7% move on the upside. Let's look at the broader markets, the mid and the small caps, and then the Nifty Bank and other sectors as well to find out where exactly is the momentum really generating in the markets. So the mid caps are up by 0.8%. Similar to the tune of the benchmark indices as well. When we talk about the small cap indices as well, you will find there's a sharper move on that front, 1.2% uptick for the Nifty Small Cap 100 index. Among the sectors, you're also looking at a very smart recovery coming in on the Nifty Bank as well, 1% higher in trade right now, followed by gains in the IT pack as well. That's up by 1.3 odd percent. PSU banks doing very well. Private banks also, both of them participating for the Nifty Bank today. Consumer durables, that's the index to watch out for again, 1% higher for this one as well. Let's also look at how the pharma pack is doing because the news is buzzing in that sector, 0.6% higher in trade. In fact, all the sectors are up in the green as far as the Nifty sectoral indices are concerned. Now, apart from this, let's look at the top gainers. At this moment, on the Nifty pack, you will find Cipla is the top gainer, up 4% at 1213. Record levels coming in for this one, followed by IndusInd Bank. You have energy and metal majors, Coal India, Hindalco, and even Tech Mahindra from the IT pack. That's up in trade as well. On the downside, however, you do find Bajaj Auto, BPCL, Power Grid, Eicher Motors declining by half to 1% in trade. But time to welcome our guest on the show. Mr. G. Chokalingam joins in. Well-known market expert. Welcome, sir, and thank you so much for taking the time out for this discussion. Always a pleasure having you with us on Business Today TV. First up, I'll take your view on the markets overall. We did see the markets correct sharply for the last two trading sessions. There's a bounce back again today. But how are you looking at the entire setup? Would you say that the summer highs, monsoon highs are now behind us? We are at the peak, at least for the moment? Or do you think that the markets can, after this one and a half weeks of consolidation, start to get back on the uptrend?
Yeah, thank you. The market outlook, if you ask me, the medium to long term outlook looks amazing, excellent. Of course, we always tend to say long term good, but I can tell you, even from the medium perspective, beyond May 2024, it looks amazing. All of us know what's happening on the GDP growth story, what IMF has forecast yesterday, what S&P has said about the fastest growth prospect for India. Apart from that, there are many macroeconomic parameters which are converging into a solid positive momentum. Whether you take a banking credit growth or quality of assets or FDI inflow, NRI remittances, the PLI scheme boosted investments, capex of state governments, capex of PSUs, capex of central government. So I can give you a long list of macroeconomic parameters which are conducive for medium to long-term growth. So the growth story looks good, and also it is supported by the robust inflow of investors. Every week we are seeing 6 to 7 lakh new investors coming into the market. Almost this is happening for last 2-3 years. Yeah. So the only short-term concern is there. That's mainly tactical one, because the market cap is overall 300 lakh crore. I always say that there is a dichotomy, or there is a gap between the market cap and the liquidity appetite of the Indian market in the very short term. So even half a percent of the selling comes out of this 303 lakh crore, your market would need 1.5 lakh crore, and this market cannot supply that kind of liquidity even 1-2 months. So if any sentimental impact comes or any political economic news comes, that is the biggest risk, and therefore I would suggest have a tilt towards large cap Sensex index stock or top 100 or top 250, and slowly reduce the exposure to small and mid cap, because from corona bottom they have already rallied 3-4 times if you look at the index. So the risk is increasing on the small cap. So I would suggest put some money in cash, some money in gold, and some tilt towards large cap index stocks.
Fair enough. A good strategy for all the investors to follow when the markets are trading volatile after a week of consolidation as well. But let's shift focus to particular stocks. The top gainer is Cipla, and the news flow is such that Blackstone is expected to submit a non-binding bid next week for acquiring over 33% of the promoter stake in India's third largest generics company by revenues. Now, remember, the shares of Cipla have already soared about 5-6% odd intraday today to hit all-time high levels. And this is on the news of Blackstone eyeing to buy out promoter stake. Mr. Chokalingam, how do you view the news, and do you see the entry of this PE investor in Cipla as a positive? Do you believe the upcoming investor can actually fuel the company's growth to newer heights?
Certainly, one thing has happened in the last 7-8 years. If you see, wherever the PE funds have entered, they created more wealth. They entered JB Chemical, and then the stock went up. They entered Emphasis, the stock multiplied. So there is a history of the PE funds working aggressively because they have large exposure across the world. They can they can give a proper guidance to scale up the business and improve the profitability. So therefore, if it happens, yes, it would be positive. But if you ask me whether one can rush to buy after the rally, I am very skeptical, purely based on, again, the fundamentals. I believe that this positive news is in the price already. Those who are lucky, they may hold because it's a large pharma stock, and it's a defensive stock, so one can hold. But buying, I would not suggest, because if you decompose the business, roughly about 10,000 crore Indian business and 12,000 crore export business. And if you look at the recent acquisition, export business are valued at around 1.7 times enterprise value to sales. And if you look at even company like JB Chemical, which is into domestic branded formulation, or Aries Pharma, they are trading at around 7 to 8 times the branded sales. That is EV2 branded sales. Now, if you decompose Cipla and I give 2 times export sales, even 7 times the domestic formulation sales, that sum comes to about 94,000 crore, and that is exactly around the current enterprise value of the company, market cap minus net cash. So I feel there's not much upside. On the other hand, by any chance the deal doesn't happen, then there is a risk also, because in terms of P also slightly stretched valuation.
Right. In fact, I wanted to get a deeper understanding from you as to what is your outlook. See, last week we did see the company report good numbers as well. When it comes to the profitability, that rose 45% year on year. The US business posted highest ever revenue as well. So, after the earnings, what was your thought process? And after this news flow, has anything changed for you with your regards to outlook on Cipla?
No, nothing has changed fundamentally. It's a great management, great balance sheet, and a lot of net cash. And as you rightly said, the growth also very appealing. What has changed is only one: the price has moved up and the valuation has got vertical shift. So therefore, one has to be little cautious in rushing to buy. The market always discount the future. I mean, never try to discount the past. Then you get punished if you make a mistake. So instead of Cipla for retail investors, those who can take little risk, I would suggest something like Indoco Remedies. Personally, we don't hold it. We have given a buy call to our clients. That is the kind of stock I would say that it is trading at around 3 times domestic branded sales, and around roughly 1 time export sales. And if you look at the PE funds, mostly they took over small and medium-sized companies, and then they created a big value accretion. In my limited knowledge, I have not come across acquiring.
Yeah. Right. So, all right, Indico Remedies again up by about 0.2% or at 324. That's a preferred stock for Mr. Chokalingam right now. At this point in time, when the Cipla stock has already run up to record levels, the news looks priced into him, and he does believe that fresh buying could be avoided at this point in time, and one should really wait for all the deal contours to emerge, only then take a call going forward from here, because right now good news seems to be priced in on the stock already. 3.6% up, 1208 currently for Cipla. But remember, it has had a remarkable move in the last 1 month. We've seen the stock rally about 20% already. Of course, things were slow moving. When you see a 1-year return, it was 16%. YTD, it moved up 12% odd. The last 6 months, of course, it's 18%. The last 1 month is where it has really moved up pretty sharply. Of course, the pharma stocks also came back in flavor. The sectoral rotation happening right there. The earnings also supporting the movement. And now that this corporate development has taken place, you can still see record levels on Cipla at this point in time. But remember, I wanted to share with all our viewers as well that, you know, what this will do is all eyes are on how Blackstone could perhaps start a process which could see eventual exit of the Hamid family from Cipla, which created Cipla in the year 1935. Remember, the Hamid family, who are the promoters of India's third largest pharma generics player by revenue, that's Cipla, they hold a cumulative 33.47% stake in the company as well. And remember, so far, Cipla has already been seen as a crusader against big pharma pricing strategies in the emerging markets, you know, on account of championing the affordable drugs as well. Now, with the PE player right now entering, what Mr. Chokalingam did hint is that they have, wherever they have entered the Indian markets, in whichever companies, eventually they have created a lot of wealth. So that is a bit of positive. But at this point in time, the valuations look a little stretched, and the good news seems to be priced in as far as Cipla is concerned. But definitely good news coming in on that front as well. But let's, apart from the Cipla counter, let's also check some other counters as well. Let's look at Zomato, for example. That really shot up pretty sharply after the earnings were reported yesterday. Remember, Zomato has, given profits for the first time in a quarterly earning, and 2 crores of a profit is what they have reported. Even now, the stock is holding up at 95 odd levels, 10 odd percent of surge. But of course, the confusion lies that why the profit before tax is still in the negative, but the profit after tax is 2 crores. So there's a difference right there. There's the other income factor that's pushing the bottom line higher. The management is still confident that they can remain profitable, and that is what has led to brokerage houses really raising their targets for Zomato as well. In the same breath, let's also look at Paytm, for example. That's another new age technology company that's moving up in trade today. We have seen even Paytm share rallying in trade, about 4 odd percent up in trade right now. Remember, Paytm has also given its monthly business update. So there you have it, 792 currently for 197 share. The fintech company posted its monthly business update for the month of July, in which it says that the average monthly users rose by 19% year on year to 9.3 odd crores. So these are the two spaces that are buzzing pretty sharply. Let's also check the IT pack as well. That's also moving the index higher in trade right here. Nykaa has also moved up very, very interestingly, about 2% higher at 146. So the new age tech companies are coming back in flavor. All eyes remain to be seen as to which is the better stock for you to really now buy, and we will get you all those expert views onto that as well. Let's get you the banks and the IT names as well to see which are the stocks that are moving higher. 1.5% uptick for the Nifty IT. That's the index that's moving up, the markets overall. And whole lot of stocks. Tech Mahindra, of course, we did see the movement coming in on that one as well. Apart from that, let's also look at some of the other constituents that are moving up in trade. So you do have Coforge, Wipro, all of them up by 2 odd percent as well. HCL Technologies, LTI Mindtree, TCS, Infosys. In fact, all the constituents of the Nifty IT are up into the green, and the IT pack is moving pretty sharply. Let's also look at the PSU banks and see the movement there, because this is one of the best performing indices sectorally in today's trade. So you can see PSB, Canara Bank, PNB, all up in trade right now. Union Bank and Bank of India also supporting the move. So the market's in fine fettle right now as we are close to the week's close as well in today's trade. Looks like it could be a Friday after the very, very volatile week that we have already seen. We'll continue to watch out for more market momentum for you, so you can be with us and track the market movement with us. Don't forget to subscribe to our channel, that's Business Today TV, and also continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in.
So we are living certainly in very exciting times. We are living in a time when all of us are increasingly finding ourselves in a much more digital world than ever before. And it is in this context and in background that today in Parliament, the government, Prime Minister